Hey, is it too late for a Will Smith slap you joke? Too late? I don't know. Things move quick these days. I don't really have one. Yeah, is it too late? I might come up with one. I've seen some good ones online. They said that the Chris Rock tickets, they were able to charge more for these tickets. I'm like, yeah, everybody's lining up to slap him. You're gonna imagine the people when he does stand-up now. They're gonna want to run up to the stage. Hey, welcome to the Closing Beat, everybody. Happy Tuesday. How you doing out there? Wednesday. It's Wednesday. Sorry. Every day is a good day when the market's open. That's all I care about. We're financial advisors here at Jazz Wealth, and happy to chat with you today. We like to come to you every day and just try to teach a little bit. You know the drill if you've been around, and we're going to do the same here today. So I hope you're ready. Roll up your sleeves. You see what I did there? I'm ready to roll, man. And let's get started. Off to the right-hand side of your screen. Apparently, markets don't trust Putin, right? I don't know. You know, he says they're going to do one thing. Maybe they're doing other things. I don't know. I don't follow a whole lot of that. It's like we're going one way and then we go the other way. Whatever happens, it doesn't matter to me. What I know is the stock market as a whole is quite extended here. It is worthy of a pullback. Even a small one would be totally welcome. So I think you have to assume that that's the next case here, a couple days of quiet or a pullback. It would be very difficult. I think it'd be very difficult to get people excited to pay up after this move. I mean, ask yourself, are you willing to go all in on stocks and be really aggressive and all that stuff right now? I think that's tough. Now, news can change, events can change, of course, but I think just generally speaking, boy, it's a tough one. You know, I wouldn't be looking at that. But nonetheless, you got the S&P down about 0.5% on the day. If you look over at the NASDAQ right at the 200-day moving average, that's fallen back a little bit. The Dow almost turned positive right there at the end of the day with a little bit of a rally, so that's not as extended. It's working on it, but of course those are less stocks there. The Russell 2000 reversed almost all of yesterday's losses. In fact, the big losses today, the big weight on the market today was in fact small caps. So your small cap growth stocks were the leading loser of the day, followed by the Russell 2000, small cap index, you would call it, or core positions. And so that's where kind of the weakness was. But other than that, anything growth related did tend to have a little bit of a pullback today, some worse than others. If you're looking inside the S&P here today, some of the ones that got hit the worst, although nothing odd, you know, NVIDIA, one of the bigger pullbacks on the day. Sticking with chips, you got AMD pulling back. Qualcomm, I think, was the biggest loser, down 5% on the day. Looking over at banks, I think a welcome pullback in some of these. Wells Fargo, Citigroup, and I mean, that's the weakest of the group, but, you know, a pullback there. MasterCard, you got Visa lower, which is good. We've got that in our office trades there. PayPal is one of those that also pulled back, but a good area for it. You don't expect a stock that's been beaten down like this, or like Facebook, to just magically start recovering, right? That'd be quite odd, and you know the reason why, right? You have people for months and months and months and months and months that have been taking losses. So as PayPal starts to rally, who think about all these people? You get all these people going, whew, okay, the loss was not less or not as much as it was before. I'll sell some and take a smaller loss. As it works its way up here, same thing. All these people are going to start saying, well, at least the loss isn't what it was. And so that's that selling pressure that holds these beaten down stocks from having really big, miraculous rallies pending some kind of world-changing news or sector-changing news. Over in healthcare today, United Healthcare made new highs, very strong, actually. Johnson & Johnson did the same. You've got Anthem, there you go. Also making new highs, and if you're looking for new highs, that's about where you're going to look. Cigna looks kind of interesting here because it hasn't quite run all the way. And Centene reversing all of yesterday's losses as well. What else do we have? Energy over in that space. ExxonMobil, chop zone, man. This is big time chop zone here. CVX also, you're sitting at highs, so you're not complaining if you own the stock. It's just there's no real progress being made, and I think that's worth it. There's going to be a little bit of quiet period. Marathon just doesn't want to be quiet. That would stick out as one of the stronger stocks out of the group, and Phillips 66 is trying to be one of the stronger groups there. In retail, it was the same story almost every single place you look today. Weakness, Lowe's, everything across the board. As you look through some of the weaker stocks, and I'm going to go to the S&P to do this because watch how this all looks the same. It was the same thing. PVH, big gap up yesterday, big day today, erasing, in most cases, erasing all of it there. If you look at Etsy, erasing all of yesterday. Going through something like a Lowe's, erased more than all of yesterday, right? Bed Bath & Beyond's the same thing, erased all of yesterday. So it was like in one day, you got that weakness just gone like that. Bath & Body Works, same thing. And you could just use the XRT as one way to look at the entire retail industry. Same thing, big gap up yesterday. Yay, we found a bottom. Today, oh, maybe not yet. Right? That was basically the mindset over the past couple days there. What else? You got gold up 1% on the day, chop zone, right? The very difficult areas to move new money to right now. I mean, it's hard to commit one way or the other because these stocks, commodities, everywhere you look, cannot commit one way or the other. Oil's no different. So it's nice to see a little bit of a bounce off lows yesterday if you're an oil investor. But if you're buying gas, of course, that's a problem. Anyways, what do you make, like, that this is going higher, lower? Do you want to bet that it's going higher or lower here? It's right smack in the middle of all this action over the last couple of weeks. It's a wait and see, right? So very difficult time if you are wanting to put new money to work. I just think it's a very difficult time to be excited about putting money to work. Sure, you have extended moves, you've got strong uptrends, you can focus on those. They're just few and far between right now. All right, so let's talk about bonds here. Talking about bonds, you got a little bit of a rally here today, which means yield came down just a little bit lower. The talk is of the inversion of the yield curve. And actually in Wine and Wealth tomorrow, I'm going to go through each and every data point. And if I could just point out, Wine and Wealth tomorrow will be focused on a couple things. One, specifically, how long does it take to make a profit? We're going to analyze every single time frame from 5 minutes, 15 minutes, all the way up to 30 years. And we're going to show you the average amount of time it takes to be profitable if you just bought and held. So that'd be a real fun one. We're also going to talk about wash sales tomorrow, and we're going to be talking about the inverted yield curves and specifically a lot of data as it wraps around recessions there. The point being, if you look at the yield curve inversions, everybody likes to look at a few different things. What I've done on the charts here is shown you the really the spread between the 3 and the 5 year rate. Anything under 0 would be inverted. So the spread, we want to be higher on the 30 year than the 5 year. There's just one way to look at it. So right now we're headed back towards inversion. In fact, we did temporarily invert. Now the rule is every recession has had a previous inversion, but not every inversion leads to a recession, right? And the gray area in the background is what you're looking at for that anyway. So every time we go inverted, we have worked our way into a recession. We go inverted, we eventually work into a recession. But not every inversion leads to a recession, so it's a little bit tricky. There also happens to be the length of time that we invert. So we're going to drill that down for you over the next, or in the Wine and Wealth class. Now, everybody likes to look at the 10-year and the 2-year. So when you're looking at the inversions of the 10-year versus the 2-year, the chart here is the same thing. Anything under 0 here would be considered inverted, meaning the 2-year yields more than the 10-year. Is about as simple as I can say it. Same thing, we keep finding ourselves touching or inverting where the 2-year yields more than the 10-year. We don't want that. Ideally, in a lower risk environment, the 10-year has a wider spread between the 2-year. You obviously more risk the longer time you go out there. The concept is the same here. Every inversion, every recession had an inversion, but not every inversion creates a recession. That even goes back here. I remember talking about this with you guys. We go inverted very shortly after we hit a recession. So these are those recession indicators that you see people talking about, and more to come on that in Wine and Wealth, of course. We'll focus on some of the geeky data there. That will also be available, of course, for research members, because that's available for everybody. If you join the research site, by the way, if you're not included in a Wine and Wealth, it's because we're just talking about jazz wealth, like retirement account stuff that has to do with portfolios. It won't help you, so we just don't include it so you don't have a cluttered research portal filled with videos that aren't useful. We don't want people thinking that that's all we do. But of course, tomorrow will be the same there. It'll be included for you. What else do we have? Sector-wise, if you look around the markets here today, energy is going to be your leader thanks to the little bounce in Oil that we had earlier today. Utilities getting very extended. If you look around some of the utilities, we'll do that here in just a moment to take a look at that. And home builders. If you look at home builders, we're hinting at making new lows, right? Home price index up 19% month over month. I think I've got something, or year over year. So let me share this with you here. Here's the home price index. This is looking back basically into the 80s. This is about my birthday, actually, when the data starts here. And so we hit all-time highs, right? There's no question about that. We're rising at a rather accelerated pace, as you can see there. We're at fresh highs there. The average home price is like, what, 400,000? See what we got here. So they're just missing a zero. $370,000, almost $400,000. So that's not a drop there. They just somehow the data came through as missing a zero there. But the problem is we have home builders that are about hitting new lows here. Did you know that home builders are currently the cheapest stocks in the S&P, right? So if you're looking around the S&P here, they're trading at about 4 times earnings. So if you're a fundamental trader and you like looking at that, 4 times earnings. You can't really get that anywhere else, maybe besides Ford. But that's like saying you're paying $4 for the stock for every dollar they're going to make in the future there. Lennar happens to be the cheapest, currently trading just at about 3 times earnings there. Toll Brothers is the more high-end home build. They build $1 million homes and better there, some nicer homes. They're trading at 7 times earnings. They're also trading at the same value as all of their assets as a company. It's called book value. So they're actually trading at the exact same value as all of their assets. So fundamental traders would say, where's the risk, right? Now you're just looking for the right price. And of course, these guys do sell those higher end homes. Now, if you look around, you got Ford. I think Ford is currently, no, Lennar is the cheapest, but Ford, not a home builder, of course, trades at 4 times earnings. Capital One, just out of curiosity, looking around, trades at 4 times earnings. Citigroup, now trading a little bit less than 4 times earnings. The average in the S&P right now is 20 times earnings. So you could very well argue an investment maybe in home builders. It's a tricky one, but just purely on valuation, right? They're just trading so cheap. So all those people that are out there like looking for cheap stocks, I bet you they're focused on the home builders right now. Very odd to see that. And the reason you're seeing that is because of the length of time that it's taken for these homes to actually get completed, put on a market, and actually closed. So pretty cool there. What else do we have here? I rambled a little bit. I'm sorry. In our office trades today, we did a handful of things. Let's cover that. So if you want to join us, jazzwealth.com/research. We just do office trades. We show everything that we do there, how it's going, good, bad, or ugly. One ugly today was Restoration Hardware. It was an earnings play that Cody tried his hand at, and we actually were able to work our way out of it pretty good. So I think we're in good shape there for the adjustment that we made. If you want to see how to defend a really sort of position that turned out to go the wrong way, how'd we do that? Iron Mountain, I'll go over here. Iron Mountain, an extended play there that we are playing now short. I maybe got suckered into a trade here doing a strangle on Netflix because of the high volatility, and our Starbucks play. We did a ratio spread on this one last week, and the stock went up rather than down. We wanted it to go down, so we made about 63% of the total premium, but don't let that mislead you because we collected like 50 cents, right? So it was very low. We were actually hoping that the stock would fall and we could make the bulk of our money there. But there you go. I mean, if you want to see a way where we were actually wrong on the direction of the stock but still made a few bucks, that would be a good one to look at. We'll be back, of course, on Friday to do that for you again. New highs and lows for the day. You got 43 new highs, no new lows. Utilities. Often overlooked sector here. So if you look in the utility space, you could use the XLU just to see how extended everything is. Off to the races, right? And that was before rates started falling a little bit just over the last couple days. So utilities getting awfully excited here, probably recognizing the overpricing of interest rates here or the underpricing of interest rates in the short term, and probably responding to that just a little bit. But inside of the XLU and stocks that made new highs, Con Edison is one of them. American Electric, American Energy, forget what they call themselves. That one made new highs as well. Southern Co. also hitting new highs. These are very extended stocks. So you if you're a counter trend trader, you're thinking, oh, okay, go ahead, get yourself extended. I like looking at that. Iron Mountain, which I already mentioned, that hit new 52-week highs, and we got our little trade on that one. And Valero, sticking with energy stocks, one of the stronger, not one of the upper top percentiles, top 10 percentiles of strong stocks for the energy sector. That one hit new highs as well. Stocks in the news, wasn't a whole lot moving on the plate here today. So I'll do this and then take your questions. UBS in the news, they are doing a share buyback of $6 billion. That's not a lot for them, but that's what they're doing. Restoration Hardware looked at very much similar to every other retail stock. Yesterday, gapped up, good day. Today, reverse all of that gap down. So now you know what that looks like, whether you're in Restoration Hardware or anything. That's what happened there. Five Below is very much similar. I mean, same thing. Five Below has earnings better than expected. They did lower their guidance going forward. Inflation issues for them. It's kind of hard when your business model is fixed to $5 or below, right? That's what they do. Chewy. CHWY, there we go. Same thing in the retail space on the pet side. Reported weaker than expected earnings. It was bad all across the board. Revenue was less than expected. They lowered guidance going forward. It was not a good one for them. And I would say PVH would be in the mix there as well. They had earnings. They did lower their guidance going forward as well. So not good for retailers across the board. Norfolk Southern in the rail space, they're going to buy back just $10 billion. That's it. That's about 15% of their entire value. They're just going to buy it back. We have this cash. What do we do with the cash? Let's just buy the shares back. I don't know. 10 billion? Who's counting, right? So that's what's going on there. Tomorrow you got some Fed presidents speaking there. You've got Copart taking the place of People's Bank in the S&P 500. So, I'm sorry, Camden. I always say Copart. So this is a REIT, and they're taking the place of People's Bank, right, in the S&P. There you go. I don't know why, but that's what's happening there. Stock down about 5% on the day. April 4th, that'll take effect. And so basically you just have Camden stepping up from the S&P 400 to the S&P 500, so congratulations for them. You also got natural gas numbers coming out tomorrow, so no doubt that'll get some attention because of maybe natural gas rationing going on overseas in the old Europe there. So I don't know. Doesn't sound good over there. I'll take your questions if you happen to have any. Otherwise, I'm going to get back to work. Do what we do here. Sold all your positions, raising some cash. Okay. You said that's it, man. Southern Co. trading at 31 times earnings for a utility, right? A utility stock. Yep. Is this a short, insane price movement? Is this just a short squeeze happening? Probably not, because we didn't have that level of volume on the short side. Right? It was more profit taking on that side. So since the beginning of the year. So I don't know that people woke up and said, hey, right about January, I'm not only going to sell and have my capital gains to deal with for another year or so, but I'm going to short as well. I don't know about that one. You got a 460 put on the SPY. Now you're nervous. Well, the good news is if you bought it, you are, got nothing to lose. So, or besides what you paid for it. So you have the 460, so you're at the money, that's good. And you're basically just making a directional bet that the S&P is going to move lower. It's fine. But you've obviously limited your risk because you bought the put. So I don't know. I don't blame you for being nervous. That's it. This is all we can muster up at the moment. Yep. What area would you put new money for the long term? I would hope that I didn't have to do that because I'd be very frustrated by having to put new money to work right now at this very moment. Yeah. Andre says 430 in the next 2 weeks. I'll take it. Yeah. I don't know if that happens, but I mean, let's do that. Whatever you got to do to make that happen. That works for me. Appreciate it, Eduardo. Thank you, sir. Kind words. Beautiful. All right, so Wine and Wealth tomorrow is going to be rather interesting. A lot of data type class there. So if you're familiar with the class, you just grab a glass of wine, grab whatever you like, come hang out with us. We'll talk about how long does it, like if you have a friend that day trades, we'll give you the stats. How long do you have to hold a trade inside of 5 minutes in order to make a profit? What are your probability of having a profit inside of any 5-minute period? How about 15 minutes? What if you bought and held for 10 years? What's the probability that you'd make a profit? How much would you make? We'll also do wash sales, because I've been getting a lot of questions on wash sales lately, so we'll cover that in detail and talk about the data behind the inverted yield curve, because there's a lot of cool stuff there. Timothy, you like BJ for a long-term hold. So, do you own it? Is that something you're saying? Like, I'm holding it or trying to decide about holding it? There's nothing wrong with, I mean, look at this. If you own it, I've got no problems with that. Anytime you have a gap down that just immediately reverses itself, that tells you people just overreacted. That's all it was. Everybody was wrong right here that sold on that earnings move. No problem with that. Yeah. Can it take some of Costco's market share? Why? What do they have cooking that would do that after all this time? You know, I mean, maybe there's something I don't know about them with their same-day delivery or something like that. But is there something that moves the needle towards BJ's that wouldn't have done it last year, the year before, the year before, the year before, the year before, right? What does it mean by improve executive compensation program, pay hike for the executives? That could be a fancy way that they are saying that, and or making it more competitive for the executives to be paid based on stock performance or company performance. So that could be trying to attract some big shots maybe. I don't know. I don't know specifically, but that's well worded. That's a fun way to say it. All right, enjoy the rest of your day, guys. I will get out of here, and we'll be back tomorrow to do this all over again, along with Wine and Wealth and all that other good stuff. See ya.